Hey guys, so we are now in chapter 8 and our topic is all about horizontal or comparative analysis. So we'll begin with our learning objectives. So at the end of the chapter, we should be able to 1. Discuss the nature of horizontal or comparative analysis. 2. Identify the steps involved in performing horizontal analysis. 3. Perform comparison using the absolute method and the percentage method. 4. Conduct horizontal analysis using budgeted data as the base of comparison. 5. Do comparative analysis using industry average as the base. And lastly, number 6, formulate a conclusion after conducting horizontal analysis. So, horizontal or comparative analysis is an analytical tool that evaluates the present performance of an entity compared to that of the last years. The analysis reflects the differences in absolute and in percentage between two periods only, the present and the immediate past. Okay, sorry for that. So, as the definition is telling us, there are two periods involved in horizontal or comparative analysis, and that is the current period and the last year's period. So, the primary objective of horizontal or comparative analysis is to determine the present status of the business in terms of financial position, result of operation, and cash flows against its previous year of operation. So, take note again that the horizontal or comparative analysis is conducted on financial statements with the same day and month but of different years. So, for example, if we're doing horizontal or comparative analysis of the current financial statements ending December 31, 2020, so the financial information in these financial statements ending December 31, 2020 will be compared and evaluated against the financial statements of the last year's period, which is the financial statements ending December 31, 2019. Okay, so the horizontal or comparative analysis could not be performed on financial statements with different dates as the day and month. Like, for example, if you have your current financial statements ending December 31, 2020, and you also have interim financial statements ending June 30, 2019, so you cannot perform horizontal analysis. You cannot compare and evaluate these two financial statements because they are of different dates and months. So this will not provide a meaningful information to users. So there are two methods of performing comparative or horizontal analysis. We have absolute amount comparison and percentage comparison. So we will be discussing these two methods as we go on the steps in the horizontal or comparative analysis. And here's now the steps in horizontal or comparative analysis. So these are your guides and performing the horizontal analysis. So get your calculators ready now and try to follow us as we go on the computation. So here's the first step. Present the current year and last year's financial statements in comparative format. So just like this one. So we have here the cash and cash equivalents of 150,000 in 2017 and 180,000 in 2016. For step number 2, compute the absolute amount of change of difference. So the difference could either be an increase or decrease. Okay, the difference could either be an increase or decrease. So this actually pertains to the first method of performing horizontal analysis, the absolute amount of comparison. So here in our example, So we are going to deduct the 180 cash and cash equivalent in 2016, which is our base amount from 150,000 cash and cash equivalent in 2017. Okay, so 150,000, which is our cash and cash equivalents 20 in 2017, minus our base amount, which is 180,000, the cash and cash equivalents in the year 2016. So the absolute amount of change is 30,000 decrease. So the parenthesis here signifies the decrease. So again, there's a decrease, or there is 3,000 pesos decrease in cash and cash equivalent, because the cash and cash equivalent of 150,000 in the year 2017 is lesser than the base amount, which is the cash and cash equivalent of 180,000 in 2016. So for step number 3, express the difference in percentage by dividing the amount of change by the base. So this is now the second method of performing the horizontal or comparative analysis, which is the percentage comparison. Okay. Since we have already determined the absolute amount of change, which is the 30,000 decrease, so the next thing that we're going to do is to get the percentage change in cash and cash equivalent. So we're going to determine it by dividing the 30,000 decrease by the base amount, which is 180,000. So again, the 180,000 is our cash and cash equivalent in the year 2016. So 30,000 divided by, 30,000 decrease divided by 180,000 is 16.67% decrease, since it's still in parentheses. So the 16.67% decrease is presented in this table here in the percent column. For step number 4, the computation of percentage of change will not apply if the base amount is negative or 0. So for example, in 2017, we have cash and cash equivalent of 1 million pesos, and there was none in 2016. The amount of increase is obviously 1 million pesos. That is 1 million in 2017 less 0 in 2016. So in this case, there is no percentage of change since we don't have any base amount. Kaya wala or 0 man ang cash and cash equivalent in the year 2016. So we'll go on step number 5. Interpret the change of an item by relating with the change or movement of other related items. So for example, if there is a change in current assets, so it should be related to the change in current liabilities. Or if we are analyzing trade accounts receivable and notes receivable, so we must interpret these accounts by considering the changes in sales. And we have here an illustration. So this is the comparative financial statements of Rainy Company for the years ending 2017 and 2016. So in your screen right now is the statement of financial position or balance sheet of Rainy Company. And then this is also the comparative, this is the comparative statement of comprehensive income of Rainy Company for the years ending 2016 and 2017. So this is also available in your handouts. I hope you guys have read the handouts already. And we have here the requirements. So we are asked to prepare a comparative horizontal analysis showing peso and percentage changes. We are also asked to make a simple financial statement analysis focusing on the areas of liquidity, solvency, and profitability. So let's have first the requirement number one, the preparation of analysis in pesos and in amount. So we'll have current assets first, and we'll start with cash and cash equivalents. So the cash and cash equivalents increased by 3,000. So from 102 in 2016, so our base amount here is the amounts in the year 2016. So again, the cash and cash equivalents is increased by 3,000 from 102,000 in 2016, so 205,000 in 2017. So 105,000 minus 102, that is 3,000 increase. Increase since the amount in 2017 is bigger than the base amount in 2016. So next. Okay, sorry. So the 3,000 pesos increase is equivalent to 2.9%. So how to get it? So 3,000 divided by the base amount nga 102,000. So that is 2.9 percentage. 2.9%. Sorry. Okay, next. Trade and other receivables. So the trade and other receivables increased by 51,000 from 276 in 2016 to 327 in 2017. So 327,000 less 276,000 is 51,000. So it is an increase since the amount in 2017 is bigger than our base amount or the amount in 2016. So the 51,000 increase is equivalent to 18.5. So how to get the 18.5%? So it's 51,000 absolute amount of change divided by our base amount na 276,000. That is 18.5%. Next, inventory. So the inventory is increased by 39,000. So from 295,000 in 2016 to 334,000 in 2017. So 334,000 less 295,000 is 39,000 increase. Again, increase because the amount in 2017 is greater than the amount of our base, which is the amount in 2016 nga 295,000. So the 39,000 increase is equivalent to 13.2% increase. So how to get it? It's 39,000 absolute amount of change divided by our base amount nga 295,000, and that is 13.2%. So next we have prepaid expenses. So the prepaid expenses is decreased by 14,000. So from 114,000 in 2016, it go down to 100,000 in 2017. So 100,000 minus or less the base amount in 2016, which is 114,000. So our base amount or the amount in 2016 is bigger than our amount in 2017. So meaning to say na ay decrease. So the difference there is 14,000 decrease. So this 14,000 decrease is equivalent to 12.3%. Or we still enclose it in the parenthesis. So the parenthesis nato siya para ma-distinguish nato siya as decrease. So how to get it? So 14,000 decrease divided by the base amount of 114,000. So that is 12.3% decrease. Okay. For the total current assets, there is an increase by 79,000 pesos. So from 787,000 in the year 2016 to 866,000 in the year 2017. So um 866,000 minus the base amount in 2016 787,000, so that is 79,000 increase. So it is equivalent to 10% increase. So that is 79,000 absolute change in amount divided by our base amount of 787,000. So that is 10%. Okay, so the same procedure shall be applied to the rest of the accounts in the statement of financial position. So ingon atoon gyapon siya pag-compute tanan. So kung giunsa nato siya pag-compute ang current assets individually, ingnanaon pod pag-compute ang the rest, ang non-current assets, ang total assets, and current liabilities, non-current liabilities, total liabilities, shareholders equity. So every item here in the statement of financial position, ingnatuon siya pag-compute to determine the increase or decrease, the absolute change in amount o ang change in percentage. So in analyzing the statement of financial position using the horizontal approach, the following computation guidelines are being observed. One, the percentage change are not added. Okay, so the computation of the percentage of change is applied to every single item in the financial statements. That is why, as you have noticed, we made a separate computation in the total current assets line item. So wala na to gi-total ang tanang percentage to get the total percentage of change sa current assets. So what we did, as I said, nag-compute ta separately sa percentage of change sa current assets. So, wala na to siya again ha, wala na to siya gi-add ang percentage of change tanan to get the total. So, what we did is atong gi-compute every single item. Bisan ang total current assets, atong gi-compute ang iyahang percentage of change. So, another thing that we notice or you must notice is that the percentage change in total assets, the percentage change in total assets should be equal to the percentage change in shareholders equity. So kung nakita ninyo, ang total percentage change in total assets is 21.3%, which is equal to the percentage of change in total liabilities and shareholders equity, which is also 21.3%. So this is actually based on the basic accounting equation niya. Assets is equals to liabilities plus owner's equity. So assets nga 21.3% should equal to the total of liabilities and equity, which is also 21.3%. So we'll now proceed to the statement of comprehensive income. So the same procedures will be applied in computing for the absolute amount of change and percentage of change. So for instance, for sales. So sales increased by 355,000. So from 2,915,000 in 2016 to 3,270,000 in 2017. So 320,000 less 2,915,000. So it is equal to 355,000. So this is the absolute amount of change. And that is equivalent to 12.2%. increase. So that is computed by dividing the absolute amount of change in sales, which is 355,000, divided by the base amount, which is the amount of sales in the year 2016, which is 2,915,000. So that is again 12.2%. And as I said, the same procedures will be applied to all items in the statement of comprehensive income. And just like in the statement of financial position or balance sheet, the percentage changes of comparative statement of comprehensive income are not added. So what I'm trying to say is that mag-compute ta every line item in the statement of comprehensive income, just like what we did in the statement of financial position or balance sheet. Okay, we're now proceed to requirement number 2. So we're now going to do some analysis. So we'll go first to the liquidity analysis. So when we say liquidity analysis, it focuses primarily on the ability of the entity to settle its current maturing obligation. So therefore, our analysis here is mainly focused on current assets and current liabilities, as well as its related items affecting them. So in our illustration, so the total current assets of the company is increased by 10%, while its total current liabilities increased by 14.6%. So this could indicate that the inflow or conversion of the resources, the current assets, was slower compared to the incurrence of obligations or current liabilities. Next, for trade receivables. So trade receivables arises from credit sales. But then here in our illustration, the percentage increase in sales is only 12.2%, while trade receivables increased by 18.5%. So this may be interpreted that the sales on account or the trade receivable are not collected promptly or not collected quickly. So the inventories which are for sale is increased by 13.2%. So sales on the other hand increased by 12.2%. So this may indicate that customers did not immediately purchase inventory. So because of the slow conversion of receivable into cash and the slow conversion of inventories into cash, the cash and cash equivalent increased by 2.9%. And then other current liabilities increased by 17.6%, which is contributed to the increase of total current liabilities by 14.6%. So to conclude, the different changes in current assets, current liabilities, and related items may indicate the decline in liquidity status of any company at the end of 2017 operations compared with that of 2016. So we'll now proceed to solvency analysis. So when we say solvency analysis, it focuses on the movement of non-current assets and capital structure or the equity of an entity. So in our illustration, the property, plant, and equipment of Rainy Company increased by 34.8% in 2017. So, by the way, if we're going to talk about solvency, so our main focus here is the movement of the non current assets and the capital structure or the equity of the entity. So, again, since we're dealing with non-current assets, so dirita, that's why we have computed the absolute amount of change of property, plant, and equipment. So again, the property, plant, and equipment of Rainy Company increased by 34.8% in 2017, which could mean that Rainy Company acquired additional acquisition. I mean, or this may indicate that there was additional acquisitions of property, plant, and equipment during the year. And then there are two claims against the assets of the entity: the claim of the creditors and the claims of the shareholders. So the claim of the short-term creditors is reflected in the current liabilities, which is increased by 14.6%. And then there was no movement in the claims of long-term creditors, since sa bonds payable is in 2016 is 1 million, and then pagabot sa 2017 1 million, still 1 million. So there's no difference, there's no increase nor decrease when it comes to the long-term or non-current liabilities. So this change brought a slight increase in total claims by 3.3%. So, however, the equity provided by the shareholders, including the earnings of the entity, is increased by 29.8%. So, this change may indicate that Rainy Company did not rely mainly on the borrowings to finance the acquisition of property, plant, and equipment. So the increase in non-current assets coupled with the increase in the shareholders' equity may indicate an improvement in the stability status of Rainy Company at the end of the year 2017. So we'll now proceed to profitability analysis. So the operating performance of an entity can be viewed from the data shown in the statement of comprehensive income. So when we're going to study or we're going to analyze profitability, so ang atong tanawon is the statement of comprehensive income. Okay. The sales of sample company increased by 12.2%, while the cost of sales is increased only by 10.5%. So the change in sales can be analyzed by evaluating the factors affecting sales, and these are the price and the quantity. So the cost of sales, on the other hand, are affected by the purchase cost and the quantity. So the 12.2% change of sales could indicate that the sample company was able to increase the price of the product or increase the price of the product or the number of units being sold. Well, the 10.5% increase in cost of sales may indicate that the sample company was able to reduce so again, while the 10.5% increase in cost of sales may indicate that sample company was able to reduce the cost of making the product. So I'll now proceed to the changes in sales and cost of sales ultimately increase the gross profit by 15.3%. So the increase in gross profit was considered favorable because it was enough to cover the minimal increase in operating expenses. And then as shown on the statement of comprehensive income, the percentage of increase in operating expenses was only 2.7%. So this change may indicate that the management's efficiency in handling the operating expenses, although sales revenue increased only by 12.2%. So, the overall operating performance of Rainy Company for the year ending 2017 may indicate favorable movement because of the increase in net income, accompanied by increase in sales revenue and minimal increase in operating cost. So, and we're done with part 1, so I'll see you in the part 2 video. So good.